Hello, everybody. My name's True Demon, and I'm the Devil's Stockbroker. This is going to be part 2 of our BEEM Deep Dive Analysis series. In this version, in this video, we're going to unpack some more details about the CEO and management of the company, as well as look at some of the macro conditions that are affecting it and its ability to become a profitable company. We'll go further into details of their financials, the insider activity and ownership, and any risks of dilution that investors may need to be worried about, giving you a full overview of the risks of this investment to prepare you for what could possibly cause the play to fail or what catalyst will cause it to go in our favor. Without further ado, let's get started.
The management, Desmond Wheatley, is the CEO and the chairman of the board. Like I said, I like it. He's no nonsense. He's tough. He's a good deal maker. I've actually heard him reprimand someone that kept referring to his company by another name on a investor call without any qualms. And he's actually called himself an a-hole. I don't want obviously you know what that means, but saying that some people might view him that way because he does drive hard bargains on behalf of his company and his shareholders, trying to get the best value for them. So sometimes he's not viewed in the most positive light, but he doesn't mind being seen that way for that reason. He basically describes himself as being very frugal, and he has unrivaled discipline. He says if you look at the overhead and the way their business operates, that you can see that for yourself. And in my eyes, that seems to be accurate. The CEO states that he only invests in patents where he feels that they create a barrier to entry to competition for their product, and it's something that they can make money off of within the next 12 to 18 months. I found that also to be accurate just with the also purchase. They doubled their patent portfolio, and that brought them immediate savings. It brought them immediate customer business and a unique ability that gave them a competitive advantage in their line of business. He basically knows that they're being chased by short sellers, and he called them out directly, and he basically told them he's coming after them instead of them coming after him. I like that. I got a kick out of it, but he's aware of that, and he basically said that he's not going to do anything to help the shorts do anything terrible to his company, that he would protect his company and his shareholders. If you see, they have a lot of customers. There is a whole list of them, many different state and municipal governments, big companies like AbbVie, Caltrans, Goleta, let's see, GM, Google, Kyocera, Johnson & Johnson, Kohl's, Honda, NASA, Pfizer, and the list goes on. They have numerous customers. Some of them they're not allowed to name because their customers request privacy. So I'm wondering if they're going to be providing some products to possible Tesla customers that might not want to be named yet because they don't want to let the cat out of the bag, so to speak.
No, it's your show. I'm impressed. Like, they have partnerships with GM, Google, Honda, Kohl's, Johnson & Johnson. Holy cow.
Well, yeah, they have products with them. I don't know partnerships, but they definitely have products that they're selling their products to all these customers.
All right.
All right. And they do have some macro issues that are facing them. Basically, they're dealing with supply chain issues, inflation, and transportation issues, basically, like a lot of other businesses and industries. And they're doing basically what they can to mitigate those issues. The supply chain issues was one of the major reasons that they made the strategic purchase of Allcell. Not only did it bring in-house the third business process to them and gave them some control, which was strategically important, plus it gave them savings of the margin that they were normally paying out in profit, but it also enabled them to secure their supply chain in the immediate future in a way that, because everybody's having problems sourcing these battery cells, so they bought the supplier they were using in the United States just so they could have that under their control. And they are sourcing their battery cells from South Korea, and they're negotiating with another battery cell supplier in Korea to try and expand that. But That is one of the drawbacks, unfortunately, is they have to source it from another country, but that's something that everybody does because we just don't have the access and the product in our country. It's not here for us to get it locally, so they're getting it elsewhere. As far as addressing the supply chain, they're doing the savings there by the acquisition. They're having issues with shipping and transportation costs. So what they've done is they've tried to innovate, and they've developed a vehicle that allows them to deliver 2 units and install before they return to the warehouse. Whereas prior to this, developing this vehicle, they were only able to do 1. So now they're able to at least double the amount they deliver at a time, which is a little bit of a savings for them. And they're doing what they can. They're also trying to expand at both locations in Chicago and in San Diego. So that'll help when they send out products, they can cut down the amount of last mile delivery length and hopefully leverage some savings there. And as far as inflation, basically they spent a lot of their cash down buying inventory in advance so they would have it on hand, and buying the battery company so that they would have that source on hand. It drew their cash down, but it will enable them to continue filling the customer orders. And the CEO basically referenced they will get that money back in cash because a lot of the customers are good paying on-time customers, and they'll get that money back as they're selling their products. And they felt it was a smarter strategic decision to get that inventory on in their hand in advance to make sure that they can continue operating and get the backlog of the product that had been waiting due to a supply chain backlog. So get that product out as well. So they're blunting shipping costs where they can. They're enabling, double the deployment where they can. They're actually producing double the product with the same amount of employees. So they're getting more efficient in their processing in-house. They're saving on their margins. So they're doing everything they can, and they envision that even if inflation comes along, they still see that there's going to be a great need for their product simply due to the energy crunch and the energy needs here in the country and around the world, where they plan on really pushing and expanding their product in their market in other countries where they see a big demand for and a need for their product. And basically, if a recession comes along, they feel that it may not be a great environment, but they may be able to leverage some benefits for themselves by maybe getting some cheaper commodity purchases, and may be able to get some great talent. And if there's an issue with employment, maybe to get some great talent for a lesser cost. So they're trying to view recession as a possible benefit for them, and they don't see their business like dwindling down as a result of recession, not for them in particular. And then if you see next for their finances, they are not a profitable company, and they don't expect to be profitable until about 2024. But if you see in the post that I made, they have sold more of their EV ARC systems in September, October, and through November 10th than they have in basically the past 10 years of their company's existence. They've sold to the U.S. Army, Department of Veterans Affairs, City of New York, U.S. Department of Homeland Security, to name a few, and they have more orders coming in all the time. They get news. It seems like they get news at least a couple times a week, if I'm remembering correctly. You almost can't keep up. They get so much news. They have achieved the highest quarterly revenue in the company's history this past quarter, which was a 227% increase over Q3 of last year. They've achieved the highest 9 months of revenue in the company's history of $14.1 million, 156% increase over the same period last year. They've improved their net profitability so far to date this year by 25% despite inflation, but that excludes a $3.7 million expense that's related to the acquisition of All Cell Battery, which will be a one-time expense. It's not going to be a recurring cost that they'll have to worry about. Another thing I'd like to touch on is the All Cell deal that they made. That strategic deal that they made also had no debt. There was no debt involved in that deal. Basically, also was purchased from Townsend Capital for 10% of common equity that's restricted in exchange for the entire All Cell company. Basically, the restrictions are that the company is restricted to selling the stock. They can sell no more than 4% of the average, hold on, I gotta find that.
While you're looking for your information, Scrap, I'm gonna
Okay.
go and start looking at the holders information
Okay.
and see if Ortex can give us some more context. So the biggest holder was Invesco Capital Management. I imagine that they drew them down after their market cap dropped because Invesco manages the Qs and a few other small cap and mid cap ETFs. Vanguard does it as well. The biggest investor that they have presently to date is Townsend Ventures LLC, which as of today has a little over 1 million shares. Keshe Ventures has 668,000 shares. Vanguard is holding on to 440,000. Invesco is holding on to 412,000. And Invesco Exchange Traded Fund Trust for Clean Energy ETF holds on to 385,000 shares. So out of all of those, if I look at the overview, their shares outstanding sit at just 10 million. That's actually incredibly small.
And I don't know if
There's
anybody here has Dilution Tracker, but I was never able to get a copy of Dilution Tracker because I believe they have a shelf registration, but the free version of Dilution Tracker had it blocked out. So
Let me go look at it because I do have it.
oh, cool. All right, and I found that whenever you're ready. I don't know if you want me to just start it now or
Okay. Well, since you asked for dilution tracker, I got it right here on screen. They are marked as fully diluted, but they do have a high offering ability and they do have a high cash need. So their offering ability is greater than $20 million shell capacity. And they do have a high cash need. So their cash position shows that the company, according to Dilution Tracker, has a quarterly cash burn of 5.24 million and an estimated current cash of 1.7 million. This may not be taking into account their recent sales, so they may have a surge of revenue. But technically, they're still a money losing company. I have a feeling that with this last push in their price, they'll probably do an offering and there might be a better opportunity to enter the company if this is accurate. So their float is still sitting at 9.24 million. They've got a really good share price right now, above $17. Short interest is still high with 17.9%, and their T25 institutional ownership sits at about 18.8% of the company. So, assuming that all of these numbers are completely accurate, which they probably aren't, but at least accurate to the last 30 days, as of the last 30 days, then right now the company is in a good position to offer a dilutive instrument, either an at the market offering or an investment opportunity in order to give themselves some additional cash, which I think that would be a good move for the company. That would actually be really, really good if they did do that, because I agree with your assessment, Scrap. This is an excellent long-term play. This company I could see as being a potential Tesla acquisition, because Elon could see this, and I'm positive that he would express some interest, because part of his plan was to be able to have charging stations all across America, like a transcontinental highway for just EV. And this would actually give him access to all the infrastructure to do it. And this is a small company. Their market cap is only 169 million. He can come up with that with just a sale of not even 10 million of his own shares of Tesla. He could easily just suck this company up. Not saying that that's what's on the table, but just knowing what he's said about these companies, or what he's said about his goals for what he wants Tesla to be, this would actually kind of fill all the blank fields that he's been looking for. Check all the boxes, as it were.
Yep, and they are basically working. They don't really have a huge number or a lot of business in Europe, but basically the CEO earlier this year spent some time in Asia and the Levant. And I don't know exactly the Levant. I don't know if that's like Jordan, certain parts of the Middle East, but he described it as the Levant. And then in Asia and Europe, where he expects that he's going to generate a whole lot of business. And basically, the way he described it kind of reminded me of something that Pat Gelsinger of Intel said. In Europe, when they give funding and they have grants, they once it's done and the law is passed, you get the funding. It's not like such significant stuff in the U.S. where the same kind of funding you still have to go through all this red tape and procedures before you can get access to it. So it's a lot quicker deal. And because of the infrastructure, and especially in Europe, is so old, they aren't just going to be willing to go and tear down historical buildings in order to do certain projects. Setting BEEM's product in the middle of somewhere where you don't have to tie into construction to charge construction vehicles is going to be a big benefit in a lot of places like that. And then to fill the gap for the energy shortages they're experiencing all across Europe and elsewhere.
Yeah. See.
Yep. And what I was referencing was about Townsend Capital. They're a 10% shareholder with the potential to increase that amount through a stock issuance on earnouts. That's the one thing that they can get is earnouts, but they only get earnouts on the products that were from their battery sales only. If it was something that had to do with the BEEM product with also a battery in it, those don't qualify for the earnouts. Only the products that were originally from Allcell, there's certain terms for earnouts for them where they'll get it through the rest of this year and next year. And then they're restricted from selling their stock to no more than 4% of the average weekly volume during a trading week.
Okay. That's good info. So that does limit their tradability just a little bit.
And the CEO basically said that if his stock got run up for whatever reason, if the price ran up really well, that he would cash out for the benefit of the company if he needed it, or if a short squeeze happened and the price ran up. He said he absolutely would take some money out, tap money from that for the company, and he thinks that that's smart to do it, but he just wouldn't dilute the shareholders or anything like that. But he said if the company needed cash or the stock price was run up by short sellers or for any reason, that he would draw down some of that money for the needs of the company if it was required.
Okay. Well, then they're actually moving in the correct direction. BEEM has just now hit a level of resistance at just under $18. Townsend has been selling into this move, and they've been selling quite a bit. So they've sold a little over 35,000 shares now. Looks like actually a little more than 40,000 shares just in the last 10 days. So I am thinking that they'll probably finally experience some pullback. What they just experienced was most definitely a gamma squeeze. After you had talked to me about it and I saw that the stock was running up, I went and looked at the short squeeze inspect from ScourgeBot, and this is what I had turned up. Now, this information is dated now because it doesn't include the November 18th options, but up to a $17 strike, there was more than 14% of the company that was in the money. So there was a huge portion of the float that got soaked up by call holders. So if all of those got exercised, then whoever sold those calls, I'm assuming short sellers and maybe a little bit of institutional short sellers or market makers possibly, then they just got hammered. So it's possible that this could keep going a little bit, but it does seem like it's getting very close to a top. Only 7% of the company would be in the money at $22 strike. Or let's see. I think that's about 21 maybe.
I'd say it's 22.
Yeah, and I notice it seems like every time they get a news release, their stock seems to go up based on that news release. between like 70 cents to $1.30. They get that much of a bump every time they release news about getting new business. I don't know if it's every single time, but quite often. So I think there's a good opportunity when you see news to make a little bit of money as well.
Yeah, I don't see why not. The company's already run quite a bit. Do you want to? Do you have more information that you wanted to share, or should we go look at some of the technicals?
Just one last thing is that for the risks, I don't see any unique risk to them that don't apply to any other type of EV related charging company, except to say that they're not an EV charger. They don't compete with other companies like ChargePoint or that. They basically provide the structure of their product for places or companies like ChargePoint and EVGO to put their product in. So they fit another unique example like that. They don't necessarily have a direct competitor in that manner.
Gotcha. Well, I'm looking at their balance sheet on TradingView, and well, their debt to equity is really good. Their debt to equity ratio is fantastic. Let me go ahead and share these results with you guys, and we'll go into some technical analysis on this one because I really do like the setup. It's really good. I do think that they're probably due for some pullback after this big run, but this may have been a big leg of a short squeeze. This is going to put some pressure on the shorts for sure. I don't know if it'll just keep on going. That's always possible, but in my experience, when I've seen these big gamma ramps play out, and there's a big push to the upside, shorts go in one more time really hard and heavy, and then they try to dollar cost average their trades and smash it back down. And then once it gets steam from retail and retail sees the potential for it, they throw all their money in behind it after the short sellers have smashed it down, and then they end up getting buried again on the same trade that they just averaged down on, and then they start losing their margin. And then once that happens, then you start seeing one by one the short sellers start getting pushed out of their trades, and then they start getting squeezed. Can you guys see the trading view? Okay, yes, you can. So looking at their net debt, they're currently negative 2.8 million. Their current assets with cash and short-term investments puts them at 4.68 million. So they've got about a little bit less than a 2-to-1. They got like maybe 1.6 or 1.7 debt to equity ratio right now. So their receivables, however, is what's keeping them going. So their receivables are very nice. Their cash coming into the company and their total inventory value for raw materials. This is what you were talking about, Scrap, where they grabbed all these raw materials before inflation really kicked in. That was a smart move. That CEO saw what was coming. He made the right call there. So now they're sitting on $8.8 million worth of raw materials and semiconductors, and I assume lithium. So that sets them up to ride out this entire wave of inflation and cost for fuel, and get their finished goods processed and out the door, or at least finish the product and put it into storage ready for sale.
And did I mention that the ARC EV ARC 200 costs $62,000? I don't know if I mentioned it, but that's the cost of that one.
Wow.
I don't know the cost of the other, but I want one.
$62,000 for that thing? That's actually pretty cool.
Yep.
I wonder how long it'll be before they start having those be deployable solar systems for powering your entire house.
I don't
Like,
know.
is
That'll be.
that like maybe part of their goals, or am I just speculating?
I don't know what it would take to power a house or not, but it would probably still have to be grid tied. I mean, it can plug in with 120, 240 volts to plug in stuff to power appliances, but I don't know if you could run your house 24/7 off of something like that with the storage abilities that they have right now. And the generation and storage ability might not allow 24/7 running your house and your car.
Well, let's see. The average monthly kilowatt usage of the standard U.S. home, it averages at 886 kilowatt hours per month. So reduced down to a day, we'll just do 886. Excuse me, 886 divided by 30 days. You get 20. I'll round it up to 30 kilowatt hours per day. So average consumption is 30 kilowatt hours per day. What does that thing generate?
Let me pull the spec sheet and put it up there so you can pull it up if I didn't have it in there. Give me 1 second.
See if I can scroll back through it. It meets the requirements of up to 150 kilowatt output capacity for DC fast charging, but that doesn't suggest how much it generates.
Yeah, I must have forgot to put a link to the spec sheet in there. I'll have to go to their site. Give me a second, and then I'll put the spec sheet for the EVR 200.
Okay, well that's okay. So let's go ahead and move over to their cash flow, see what they're generating from operations. So funds from operations and net income cash flow is still pretty deep in the red. They've been spending a lot of money, but that was because they bought up all of that raw material. So non-cash items, changes in working capital, they're not going to be spending as much money. So we have to look back what their expenditure was like maybe year over year. And that expenditure was really small. Like it was less than 3 million total. Yeah, for 3 quarters they spent like $3.6 million in operations, and their working capital in that entire year was only about a $2 million drawdown of working capital. So when you consider that was what their usual expenditure was, and now they spent the last 3 months just building all this new infrastructure, all of the buying up all this raw material before it got too expensive, they're not going to be spending that much anymore. Man, I like this so much. I love this place so much.
A good flow of income when the payments start coming in for that business. That, I mean, now some of it was included in Q3 at the end of September, I'm assuming, but October and November wasn't included.
Man, that's lit. Prox, you found a good one. Thank you, Scrap, for following up on this and doing all this research. This is excellent.
Yeah, and Prox,
thank
found the
you so
diamonds.
much. This has been awesome.
Thank you guys so much for watching so far. We'll continue this in the next video, but if you wouldn't mind, I'd like to ask if you would leave the video a like, subscribe to the channel, and join us at hellstradingfloor.com, where you can get more information and stock analysis like this. We'll see you guys in the next one.